and markets, especially many indices, have slipped into the bear market territory as well. So that's raising a lot of nervousness among people as to what is going forward. Are we, do you think, closer to bottoming out in this slowdown cycle, or do you think there is some more pain to be had?
Sakshi, I will rule out the case of a bear market at this point of time. We are in a consolidation phase in a classic bull market. Of course, in a bull market, we tend to face this kind of a bear market kind of a situation. We perceive like we are entered into a bear market situation. That's what bull market makes sometimes. But we are in range bound at this point of time. As long as Nifty is holding the level of 23,000 level, the medium to short term outlook is the markets are in a positive territory. But at the same point of time, we are not in a hurry to run away anywhere. But given the kind of the recent correction in the market, allowed and increased some kind of margin of safety, and it also made lightening the positions where the excesses are built up in the valuations. So some kind of if you ask me, Kranthi, the valuations looks to you very mouth-watering. Absolutely no. But at the same point of time, they're also not overvalued at this point of time. They're not fringy kind of a situation. So that's what the scenario we are in. We have all the major newses have been discounted. We had a good budget, fairly good budget, and market have been waiting for a rate cut. After 5 years, we got a 0.25 basis points rate cut at this point of time. But the missing part in the market at this point of time is the earnings season. The company earnings, the Q3 earnings was lukewarm completely. But the good part here is when we interact with the management, they're quite sanguine about the coming days, coming quarters. And the inflation has been cooling off in India, which is a positive thing at this point of time. But the earnings traction has to emerge in the market, and also the worrying factor at this point of time, the global cues and the geopolitical issues that have been weighing on the market, and also the unprecedented sell-off by the foreign portfolio investors that have been creating some kind of a extra pressure in the market in the medium to short term. But one thing we need to always ponder upon, Sakshi, stock prices are slaves to earnings. As our corporates tend to perform in terms of the earnings are concerned, definitely at some point of time, the FPIs, they're going to come back to India. It's not a major concern. But we have a strong domestic liquidity. What we witnessed in the past 7-8 months or 1 year has been a liquidity-led rally. Right now, the liquidity is slightly drying up. That's where people started painting a bear kind of a picture. But I'm pretty much confident, we are not going to enter into any kind of a bear market kind of thing, but we are going to be in a range-bound kind of market. Some kind of a consolidation is expected. And what we can sense, Sakshi, at this point of time, definitely it's going to be a stock-specific market. 2025 is going to be a stock-specific market. What I own in my portfolio, what a individual investor buys in their portfolio, that's going to make a difference for 2025. It's not, we don't expect a broad-based kind of market. The market was in a mood for more than 18 months. Whatever we buy in stock market, they tend to go up. But here onwards, the stock selection process has to be extremely important for any individual investor who are there in the market.
Okay, fair point. We'll start taking some questions now, Mr. Bathini, from our viewers on YouTube. We already have a lot of viewers joining in. We have Satya, Ankur Modi, we have Avdeep Thakur, Samvit Nageshwar, Kamlesh Narkere, all of them joining in with their questions. So warm welcome to all of you. Let's start taking all your questions one by one. Mr. Bathini, Kamlesh wants to know on M&M, that's Mahindra & Mahindra, L&T and Siemens. From either of these stocks, which is the stock that you find promising for long term, and can he buy now or should he wait for some levels?
All three stocks are blue chip stocks. These are the stocks to own for lifetime and pass on to the next generation kind of a stock. Beautiful stock, good selection, but the crux is what are the entry points? He can stagger the money and he can infuse this money And Siemens, if you remember, Sakshi, we have been discussing at a range of around 2000 level. Look at the
Yes.
stock. Okay, it's not a fancy stock for the investor, but the kind of performance these stocks tend to show is incredible. And these are the stocks to own. Actually, these kind of corrections in the market gives a good entry opportunity for this stock. All the three stocks, Siemens, Mahindra and Mahindra, and the L&T. He can infuse. At this point of time, what he can do is he can stagger at every dip. What a couple of days back there was a dip. Today we have seen a pullback. Whenever the dip comes, he can infuse the stock. For M&M, anything below 3,000 is a good entry level for long term. These are the stocks. Just look at the timing in these stocks. Okay, rather than timing these stocks, he can buy these stocks at dips. All the three stocks are very good stocks for long term.
Okay, let's take another one. This one is from our WhatsApp number. This is Shubham from Rajkot. He says, I have 200 shares of Network 18 at a price of 75 and I can hold it for the next 6 months. Could you please guide me on the same? From the media space, Network 18, sir, what would you suggest?
The stock was in a range bound nature. The stock went to all-time high of 100 and what we witnessed is drifting below 50 rupees. This is a stock to hold on because of the strong pedigree they have at this point of time. He can hold on, but 6 months is a very shorter duration for this stock. If you have a 1 year kind of a horizon, definitely he will get back a decent price for this stock. Right now, all the media stocks are in a consolidation phase. So that is the reason. He can hold on to the stock, but he need to have more time horizon. He need to increase his time horizon to 1 year.
Okay, I hope this has answered your question. Let's take another one. This is Satya, and he says, Good afternoon, Sakshi. I want to know, in spite of good results, Alembic Limited and Oro Pharma are still muted, and I have been holding both these stocks in my portfolios at slightly higher levels of 5% since last few months. I want to know whether I should continue holding. Alembic Limited and Oro Pharma, sir, post the earnings, what is the suggestion that you'd like to give?
Alembic had a rally, Sakshi, but December quarter has been a typical kind of a quarter for them. So when we have to compare the data, okay, it's fully priced in at this point of time. He can hold on. Being a pharma stock, he can hold on. He will definitely get back his price. But one thing what he need to do is he need to hold on to the stock at this point of time. It is fully priced in at this point of time. For a stock like Alembic, he can hold on for this stock.
Okay. Next is Ankur Modi. He says, Hi Sakshi, good afternoon. Hope you're doing fine. Very well, Ankur. Thank you for asking and hope the same for you. He wants to know, can I buy Geo Finance and Gabriel India at the current market price and for the long term if I have a horizon? What would you advise?
Both are decent stocks actually, but first we'll cover Geo Finance.
Yeah.
The stock has corrected on the top. Right now, they're building up the things. They're making the bricks. They're building the wall with the bricks at this point of time. They're entering into AMC business.
Okay. What we'll do, viewers, is we've lost the audio for Mr. Bathini. We'll get it back. Meanwhile, what we'll do is we'll just take a very quick break, and when we return, we'll take up the rest of your questions. Stay tuned with us on Business Today.
Invest Karnataka 2025 is our chance to showcase Karnataka's best to the world. The business community, startups, academia, and even youngsters, I invite everyone to be part of this mega platform. From February 11th to 14th, let the world witness why Karnataka is the best destination to invest.
Hello and welcome. You're watching Business Today Television, and this is Daily Calls. I'm Sakshi Batra. We'll be shortly joined by our guest to take up all your questions. But right now, if you look at the markets, they are in fine shape. 23,195 for the Nifty. So we are hovering higher and recovering from 6 days of consecutive losses that we've seen on the benchmark. The Nifty Next 50 is also up by over 1%. What we're also seeing is that there is a smart recovery continuing on the broader markets, the mid and the small caps as well. We do have Mr. Kranthi Bathini back with us. Mr. Bathini, you were taking a question of our viewer on Geo Finance and Grasim and Gabriel India. Apologies. How would you really address these two stocks?
Yeah, Geo, he can buy, but he need to have a long. The time horizon should be for longer term. Don't expect any kind of fireworks in the medium term. Many of the investors expected some kind of immediate fireworks because they're building the retail business is concerned. So it's time consuming at this point of time, and the financial business stocks are in a consolidation. Gabriel India, the stock had a very good rally. They are mainly into the accessories for the automobile industry with respect to the shock absorbers are concerned. So it's a thriving business. Everyone needs a replacement of their shock absorbers for the vehicle quite frequently. So this business is expected to do well. So, but the entry levels are crucial for Gabriel India. He can buy Gabriel India on dips.
Okay. Mr. Bathini, the next question is from one of our viewers, Avdesh Thakur. He says, I want to know on Bajaj Housing Finance, can I take a fresh entry for medium to long-term perspective? Again, one of the recently listed stocks, but because of the market downtrend, the stock has also not really performed well. How would you look at this one?
With respect to Bajaj Finance is concerned, Sakshi, the quarterly results are quite good and it's promising. And at this valuations, at this price is concerned, it looks very attractive. He can start buying the stock at this price point for a medium to long term.
Okay, fair point. Let's take the next one. This is from Samvit Nageshwar, one of our viewers on our YouTube channel, where he says, good afternoon to everyone, Sakshi, and to all the retail investors as well watching the show. Good afternoon to you, Samvit. He's holding Sonata Software shares. 40 shares at an average price of 662. So he says, I need an opinion on whether to hold or average or sell this stock. What would you advise here, Mr. Bathini, on Sonata Software?
The December quarter and the previous quarter, the results have been good, but the stock got corrected, Sakshi. He can hold on. It's a decent company. He will get back his money in the next couple of quarters' time. Okay, just he can hold on to this stock. In fact, at this point of time, if we want to add some quantity, he can add definitely for medium to long term.
Okay, let's take the next one. We will take this question from one of our viewers who also is from our WhatsApp number, who's sending us the questions. This is Maruti from Mumbai, and he says, I've purchased 25 shares of Devyani International at 185 levels. I have a vision of 3 months. Please advise when should I really take an exit? Okay, so looking for an exit opportunity. At 185, he bought Devyani International. Again, one of the, QSR space chains, franchise of Pizza Hut, KFC. How would you look at the stock right now? 165 is when we are looking at the stock right now. So it's come off the viewer's purchase level of 185 as well. Do you think in the next 3 months there could be some recovery?
There can be a recovery, Sakshi, because of the disposable incomes are going to go up, and the QSR space has been in consolidation phase. Post budget, we have witnessed some kind of uptick in this stock. So if he is looking for a medium to short term, he can some book profit at rallies, but it's a stock to hold on for long term. Okay, he mentioned I have a 3 months vision. 3 months is not a vision. Even in fact, 3 years. Also more than for a vision. Vision is for a longer term. So just for shorter term, he can book some profit, but definitely it's a good, strong fundamental company with a strong franchisee network in India. If you want to hold for long term also, he can hold because of the urban and rural consumption tend to go up in the coming quarters.
Okay, let's take the next one. This is Satyan from Trishur. He says, I hold CESC shares. I have been holding it since 1 year and I bought it at 122 as it was like a portfolio stock and I did not book profit even when the stock crossed 200 levels. But the stock has come down. So I want to know what should be my strategy now. 128 is the current levels on this one. And he says that I want to know whether I should just keep on holding or should I average at the current levels or switch. The other stock that he has on his mind is SW Solar. So both are from power, renewable energy space stocks. CESC currently continuing to hold or should he switch to SW Solar is what he's asking, sir.
One thing is CSC, the December quarter results have been flattish kind of a results, Sakshi. But it's a decent company into power distribution and with a strong pedigree of RP Goenka group. So he can hold on to the stock. Coming to SW Solar is concerned, okay, the stock sometimes it is erratic sometimes, okay, it goes upper circuit and it consolidates kind of a profile. That is into more by and large into the solar and green renewable energy kind of a space is concerned. So if you want to add on to Sterling and Wilson, you can add some fresh capital for Sterling and Wilson. But CESC, you can hold on to the stock. Power stocks are expected to do well in medium to long term.
Okay, fair point. Let's take some other questions that are coming in on our YouTube as well. We have some questions. This one is from Arun Kumar Gupta. And Arun says, I have bought CAMS shares, 130 shares at the rate of 4,519 per share. Now, I have a long-term view. I want to know what is the future of this stock. CAMS is what he's asking. Again, on the stock market related stories. What would you say, sir? There has been a lot of outperformance in the recent past, but again, there is some consolidation taking place in the markets. Should one continue to hold on?
Yes, actually, one can hold on to the stock. The stock had a fabulous rally, where that stock went into the range of 5,300 range. From there onwards, the stock is witnessing some kind of a profit booking at this point of time. You can hold on. In fact, at these levels, the December quarter has been a good quarter for this company, and they're expected to do well. This is a long-term portfolio kind of a stock. You can add this stock with for a medium to longer-term perspective. Definitely, the stock to buy and dips.
Okay. Satya also writes in again and he says, could you please ask a view on Natco Pharma? Yes, Satya, that's an important one to discuss. The stock slipped by over 16% in trade today. This is after the earnings came through. But Mr. Bathini, it's an important one to look at because I think just recently, a few months ago, Natco Pharma used to be one of the top preferences when it comes to technical analysts and investors were gung-ho on this stock. But the earnings have not come in as per expectations. What do you foresee after this sharp slide on Natco Pharma post-earnings? Would you look at it as an opportunity to buy, or is there something that could continue to be problematic for the stock?
Sakshi, one thing is whenever building any investor or building a short-term kind of a position in Natco Pharma, okay, the way the stock rallied in last 3 years from 400 to it touched a level of 1600. That means in the last 3 years, it given a 4x kind of return. So when a stock witnesses those kind of a spike, last 1 year, it doubled. So whenever there is a kind of a some mismatch of or any kind of miss of earnings, whatever be the reason, so the stock tend to witness a strong selling pressure. So people tend to forget the fundamentals and all. Of course, okay, it enter into a panic kind of a situation if one miss, okay, after having a tremendous rally. That's what we're witnessing in Natco Pharma. And in fact, in anticipation of these results only, the stock has been in a corrective phase after the past 3 months. So if he is a long-term investor, he can hold the stock. Don't because today is a kind of a post-result reaction kind of a day today. He can hold on to the stock, and if he is not a long-term investor, he can exit at rallies. Definitely, you'll get one more pullback kind of a rallies. Any stock get corrects, this kind of a stock corrects. Okay, there can be a pullback. We can witness. The management commentary is yet to come. Their con call is scheduled. Okay, if they can give some kind of a earnings outlook, we can witness some kind of recovery. But it's not a time to buy at this point of time. You can hold on.
Okay, we will take the next question. This is from our WhatsApp that we are getting. Swati from Punjab writes in, I need a view on Hudco or Shipping Corporation of India. Hudco I have in my portfolio. I bought at 222, whereas Shipping Corporation of India I bought at 200. मैं लॉसेस में हूँ और एग्जिट लेवल्स के लिए ढूंढ रही हूँ कि कहाँ पर एग्जिट करूँ. ओके स्वाति, ये क्वेश्चन हम डेफिनेटली आपका लेंगे मिस्टर बतीनी के साथ. हुडको एंड शिपिंग कॉर्पोरेशन ऑफ इंडिया दोनों में अभी क्या करें मिस्टर बतीनी?
Sakshi, if she taken for a longer term investment kind of a profile and for investing, she can hold on both the company. But with respect to the trading is concerned, what we witnessed is the majority of the correction and majority of the shivering and tremor we witnessed in the mid and small cap stocks in the last 1 week. So these stocks are corrected heavily in the medium to short term. So if she want to see the stocks in a medium to short term, both the stocks are trading below 50-day moving average and 200-day moving average. Whenever the stocks comes below these technical levels of 50 and 200 moving averages, they tend to underperform in medium to short term. So she can hold on. If there is a rally in these stocks, she can exit. But both are fundamentally good companies. But because of the correction in the market, we witnessed some kind of a correction in these stocks also. So she can hold on to the stock, exit at rallies.
Exit at rallies. Okay, that's the view that is truly coming in. But I also wanted to ask you, Mr. Bathini, before we take up some rest of the questions, what exactly are you advising clients to do at this point in time when it comes to fresh investments? In the market setup that we are in, are there any key sectors or stocks that you are liking over the others where you find the valuation comfort or better risk reward at the current level? Since you did point out initially that this year is going to be of absolute stock selective approach to the markets. So how are you really selecting those stocks, sir?
Sakshi, two things. Okay, one is how the sector or sectorial outlook for these companies and where the demand is going to be emerged, and from where the demand is going to come, whether the demand is going to come from domestic or the demand is going to come from overseas. So if the overseas demand is there, which geography the demand is coming? Again, the question, because if they are more exposed to US, because of the President Trump at the helm of the FIS, they are going to witness everyday beating because of his tariff war is concerned. So, so if where the opportunity lies, one is the domestic consumption that's going to be boosted. So look at the stocks in FMCG. They have not done well anything in the past 2 years. They were in a consolidation phase. So investors with low risk appetite and who don't like volatility, so they can start picking the stocks in the FMCG kind of a profile at this point of time, who are by and large looking for a stock preservation, the wealth preservation, and also looking for the moderate kind of returns. If the investor have a much longer term horizon and have little bit of high risk appetite, look at the domestic things. We have infra stocks. They are infra stocks which are domestic in nature and also expected to do well because of the strong capex. What we are going to expect, the infra demand, what we are going to expect. The stocks in infra. Just to name a couple of stocks like L&T, the large cap, Afcon, those kind of a profiles. And also Sakshi Defense. These stocks have corrected nearly 30 to 40% from its peaks. But look at the kind of order book they have been building up, and again look at the Aero India show that's taking at Bangalore. The kind of exuberance Indian defense and aerospace industry is looking. So one can buy names like Hindustan Aeronautics, the strong order book, and Garden Reach, as I mentioned every time, Mazgaon Dockyard, Cochin Shipyard. These stocks have a strong order book, Sakshi, and earning visibility. So these stocks are in a consolidation phase. Of course, these stocks have been a multi-bagger kind of a stocks
Yes.
for the investors who invested in past couple of years. Again, they are giving you opportunity, so one can add. And Sakshi, one good thing about this market is in the last 1 year, what we witnessed is plethora of new business models that are added as a IPOs. Starting from the Zomato, Swiggy's, we have Hyundai Motors, which got added. So these are the domestic consumption kind of a profiles. So these stocks had a healthy correction from its listing prices also.
Sure.
So one can start adding these stocks in their profile. Looks very attractive with respect to the long-term visibility of earnings are concerned. So this is where we are chipping in at this point of time. Of course, we tend to get into some kind of wherever the value emerges, we tend to go and accumulate for our clients.
Okay, fair point. Well, thank you so much, Mr. Bathini, for being with us on the show today and to detail for us and advise all our viewers on their questions patiently, helping them out to find the right direction on their stock strategy. Always appreciate your presence with us on Business Today.